Welcome back, Alpha Hunters. Hope you are doing wonderful today. So we just looked at waste management and we came up with a cash flow generating plan of 91% annualized rate of return using the wheel strategy or just doing some cash secured puts. And that was going to be roughly a weekly cash flow rate of 1.7%. And it was going to tie up capital of about $15,500, which would bring in $270 a week. Now, I also do break down some potential levels to be buying the stock probably later this year, next year, as I do kind of expect the market to downturn. So stay tuned on what price levels I do think would be potential big time buying spots. Okay, so let's start on that process to get to that end result. So as you know, we're going to be looking at the company Waste Management Incorporated. Ticker symbol is WM. And this recommendation actually came from a comment from last week's video from Diet Cola here. So brother, hope you enjoy the video. And I hope you gain some insights as far as what I'm thinking for this stock, especially with our current market environment. So as we're here looking at a daily picture, let's go ahead and look back a little bit more longer term so that way we can get a perspective as to what this has done over a long period of time, okay? So as we can see, it's been on a very nice bullish run really since the bottom of 2011. Really started breaking out in that 2013 time period. And it's been on a very nice bullish trend. Obviously, this little hiccup it had, this was COVID. Obviously, we had some issues back here. This was the financial collapse that went on back in 07, 08, 09. So, and then let's definitely take a look. Okay. And then we definitely had some issues in the tech bubble era. And I think that is roughly, yeah. Okay. And they IPO'd back in about 89. So I'm just going to scroll down. We can see the whole thing here. So obviously they had their IPO, the late 80s. They had their bull run in the 90s. And then the tech bubble kind of caught them up. They got caught up in that. But it's been pretty healthy. Obviously, you can see really ever since that tech bubble, it hasn't really been as volatile. It's been very smooth going. It does have some pullbacks. So what we can kind of tell from this is it does get caught up in market downturns, major market downturns, right? So the tech bubble, the financial collapse, the pandemic crash. So we can say that if we do go into a bear market here, this will be a stock that winds up getting caught up in the bearishness. Real quick, I'm gonna just switch over to their website real quick. And if you don't know about Waste Management or what they are or what they do, I get it. If you're new to investing, there's a lot of companies out there, but many people have probably seen this logo on trash trucks and garbage trucks and that kind of stuff, but they are probably the largest trash and recycler, at least in the US. I don't know about them globally. Maybe they are globally. I'm not sure on that, so I'm not going to say that. But they do have a lot of services for residential businesses, recycle stuff. And one area where I do think they will get caught up on, like as far as their business and profitability, is they do have a lot of trucks. And with rising fuel costs, could be an issue on the short to maybe medium term, depending upon how long rising fuel costs last, okay? So just kind of understand that they probably will get caught up if the market does take some downturns with fuel costs and other increasing costs. But very good stock to have in times of defensiveness like we are kind of having right now, because even though if they do have pullbacks and bad market conditions like they did in financial collapse, well, you can expect them to come back because people pay for trash services, right? All the trash from residential, commercial needs to go somewhere. And that's why stocks like Waste Management, WM here, are very, very appealing to a lot of investors, okay? So I'm going to definitely mark some lines here that I see for possible pullback areas on maybe a little bit more of the longer term. And I don't think we'll get back down to the $60 area. I'd be surprised if we got back down this low for 85, but I would definitely mark those two. If we broke this one down, this 125 to 126 area, whatever the high, the pre-pandemic high was, That looks like a 126.79 number. So if it breaks that down, you can definitely look for it to probably come back down into the 90 to 85 point area if that winds up happening. But I don't think it'll probably break this pre-pandemic high. It's going to be a pretty good defensive stock. Just depends on how well they can manage those costs with trucks and stuff like that. So I do expect our current outlook on the market. So let's just go look at the SPY, right? Because it's kind of important. So many of us know that we've been down now 7 weeks in a row on the market, and we can expect a bullish move on the markets. So I could expect something along those lines as well for waste management. As we can see, waste management actually did hit its all-time high back on April 28th, which was not even a month ago. And then it had 2 days sell-off and it's kind of been chopping down ever since then. But I would expect this one to kind of hold up strong. But eventually, if the market does continue to have turmoil later on in the year or whenever, you can expect waste management to kind of have a little bit of that issue. So I would look for this to be a little strong here, as people probably still rotate into defensive type names. Waste management would probably be fitting into that bill as a defensive type name. That's why you saw probably a lot of buying back over here in March, as people were definitely buying up this kind of a company. Okay, so they do have positive earnings, but you definitely want to check and make sure that they are definitely trending in the right direction. And they did actually have a miss in Q4. It wasn't much of a miss. It missed by about 7%. It's not too bad, but it looks like they're doing okay. And the other benefit of potentially owning the stock is they do pay a dividend of 65 cents. So that's also another bright spot as far as owning the stock. So some lines to kind of know here on the daily would definitely be this one. This would be the first one if we got down to that. And the fact that it's only sold down, let's see how far it's sold down from its all-time high. It has only sold down 11.5% from its all-time high. And I think the market just recently was down 19%, I believe, or closed at 19% down. So yeah, the fact that this is looking pretty good, pretty strong, it's holding up pretty well. But if you are scared of any kind of potential downside, as we've seen previously, if the market does have significant pullbacks, this is a company that does get caught up in those pullbacks. So maybe you do or you don't want to be involved in that. That's fine. Something that kind of pops off in my head actually is going to be the wheel strategy. I think that would be something okay. It's something that could bring you cash flow on the near, medium, and potentially longer term. But if you don't mind owning a company like Waste Management and just starting accumulating a stock position, this could be something worth looking into. But we can tell it's gotten a little choppy here recently, so we don't really have a clear trend. I would definitely say something like the wheel strategy over maybe the next like 2 weeks, 3 weeks might be good. Let's just take a look at their options. I want you to leave a stock in the comments below, and I'll come up with a trading plan. So they don't have the best deal of options, but they do have 6 near-term weekly options, which is really good. That's a good sign. So it gives you short-term flexibility as far as selling options. And then, but they only do have January of 23 and January 24 leap options. So they don't have any during the year of 2023 outside of the January one. So really, to me, there's not much to do here. I think we'll look at the wheel. We'll kind of run over some numbers on the wheel strategy here in just a second. But I think as we kind of go into a market downturn, picking up some shares or maybe doing the wheel right here at the bottom of this candle right around that 139 level would be pretty good. Other than that, I think picking up some shares at the pre-pandemic high, which is this line down here, which is around the 127 level. I don't know if it gets much more below that. Even if we do go into an economic recession, still trash has got to go somewhere. And companies like this, it's very hard to do without their services. So I definitely see this being a bargain buy at 127. If it does break down and we do get down below that 100 point level and start to make it down to like 85, 86 area, it will be bought up very aggressively. Okay, do not think if it gets down here it's going to keep going down. It'll be kind of bought up like this, where it just kind of came down and got snatched up real quick. And another possible area to possibly buy off of would be this 200 moving average on a weekly. Let's see where the moving averages on a monthly are, and the 50s pretty much the same spot. You can watch this 100 on a monthly. This would be very interesting, because it might be around that 100 point area out there in the future, to where maybe it gets to that and you could possibly buy it off that. But I'd be looking for any kind of potential buys off this stock. If it broke this 127 level down and started getting below it, I would definitely be looking for the buys, possibly off the 100 moving average on a monthly. If it got down to 185, it's a screaming buy. That's about all I can say about that. So let's figure out what we can do with the wheel. I think the wheel strategy here over the next couple of weeks would be probably fine. If you don't want to hold on to shares on the long term and you just want to generate some short-term cash flow, you could definitely do something like this. So let's take a look at the option chain, and they do have option strikes every point until you get to pretty much where it's at now, and they're roughly every 2.5 points, then going up above 150. So pretty much the at the money strike right now is right at the 155 strike. It's a little bit under 155, right? It's currently at 154.50. Really what you could do, and they don't have the best liquidity either. You can tell, like, we got 250 and 350 here on the bid-ask spread. So there's $1 on that bid-ask spread. And even on the call side, it's roughly $1 as well. So I'm not the biggest fan of potentially even doing an option strategy here. But if you're down to own the shares, this would be a good way to go about doing it. I think doing the wheel, just trying to bring in some short-term cash flow. And then as the stock kind of broke down, you got put the shares. You can continue to sell covered calls as you did collect dividends as well, right? You did collect dividends as you own the shares, and you can do some combos like that to where you just bring in cash flow a whole bunch. And you know, in the future, a company like this is going to come back. Okay, I haven't heard about some new technology where we're no longer going to have to deal with trash. So doing the wheel strategy is about the only one I could really think of doing right now. I think as far as playing like other directional plays, I think there's other better opportunities in the marketplace right now. But if you are interested in being a shareholder of this company, I definitely think some breakdowns later this year, possibly next year, down below the 138 number. Prior to the pre-COVID high, I really do like that number of like 127 area. I think that would be a good spot to be buying shares. I wouldn't be doing it up here. I wouldn't be doing it up here without doing put sales, you know, doing the wheel type strategy to generate some cash flow. But I'd be okay with doing potentially the wheel strategy, just cash secured puts here over the next like 2 weeks or so. Because if something does happen and you get put the shares, well, at least you're doing it on a company like this rather than something else you don't really know. So let's take a look at that wheel strategy. So if we did sell the 155s here for let's say we could probably sell these for like 270. I'll say 270, even though that bid-ask spread is pretty wide. That is really, really pretty wide. So we'd be able to sell that for 270, but we'd have to have a capital outlay, right, for the cash secured put. We'd have to put the cash up front of $155 per share. But remember, you're gonna have to multiply that by 100. So we can run down fully on those, but I just wanted to get this rate of return. So we'd have a weekly rate of return of about 1.7%. So that's pretty good. And then if you actually multiply that out by 52, so your annualized rate of return on that would be about 91%. So over previous weeks, we've been looking at doing the wheel strategy on other stocks, and some of them haven't been this high. So this is actually kind of promising if you were to do that. At least you get a pretty good cash intake over the next couple of weeks. Now, if you want to know how much capital you need to put forward for doing the wheel, right? So as I said, if we did the 155 strike and then we multiplied that by 100, so we need about 15,500 in cash for this, and that would be to generate 270 per share, right? And we times that by 100, you'd be able to generate $270. So I wouldn't look to do the wheel strategy outside of maybe the next 2 to 3 weeks, possibly 4, but at least you'd be able to bring in some cash flow. And if this stock wind up getting hit over the next couple of weeks and you did wind up taking on the shares, you just turn around and you do the covered calls, and you can just keep doing the covered calls until it comes back. The main thing right now is to protect capital, and I'm not really seeing the promise of being directional on any way, but I do like doing the wheel here, maybe potentially over a couple of weeks. They do have a dividend coming up here in about 2-3 weeks, but right now you really want to just protect capital as much as possible. But there's nothing directional here. It's kind of, we're just chopping sideways. I do think it will get caught up in the sell down that probably happens later this year. So outside of doing the wheel strategy or just selling cash secured puts for the next 2 or 3 weeks, or if you just want to sell one 2 or 3 weeks out, you could definitely do that. I just like to sell it every week because that's where you collect the most cash. But come up with a plan to generate 91% of an annualized cash flow rate is pretty good. That's pretty solid. And the other thing about doing the wheel, particularly on a stock like this, is, like I said, we are trying to protect capital. So at least you're doing it on a company that is going to rebound here over the next couple of years as the market kind of starts to rebound, or whatever kind of downturn we do have in the marketplace. I would expect Waste Management to kind of not have an issue rebounding. So Diet Cola, hope this answers a lot of your questions on what I was thinking about the stock and gives you kind of a baseline for how you can game plan on going forward with Waste Management. Alrighty, take care, Alpha Hunters.